How's it going, everybody? It's Stas here. You remember me? Yep, you better remember me, because tonight we got to break down some stocks. We got to go over the markets, what's been going on as of late. We're going to break down some charts, earnings reports coming up, and overall how I'm navigating these markets. So before we do dive into that, make sure to get your free money from Moomoo. Link down below. You get up to 5 stocks, each of which could be valued up to $3,500, and you get a free share of Neo guaranteed. That's until, I believe, the end of March. So get on that, get your free money, deposit at least $100, and you get your free stocks. Again, link down below. And with that being said, let's get right into the video. We're going to start off breaking down SPY, Triple Q, what's been going on over the past couple of weeks. Then we'll talk about some earnings reports coming up and individual stocks that I'm looking at right now. So, number one, again, we got to look at SPY, which, what else is new, guys? It's been downtrending, and this is important because what we saw on Friday, and I kind of covered this on Friday, but just a quick refresher for everybody that maybe forgot about it, or you're new to the channel, or you're watching it for for the first time, whatever. What happened on Friday is, number one, the downtrend continued. It's been confirmed now because we failed breaking out of 435, which is a big resistance. It was on Friday, and we failed breaking the downtrend, even though we momentarily got faked out by seeing SPY break above the moving averages. And then at close, as we got closer to the end of the day on Friday, this thing collapsed back under the moving averages. We hit that lower high, like I said. And what is very alarming is the fact that we took out the lows from Thursday. Take a look at this, guys. The lows from Thursday were around 420, 420.5, and we got down to about 420 at close on Friday, and we actually went down to 419 after market hours. So we are gaining momentum under that level from Thursday's lows again, which is not a good sign. And I'm sure, and I'm not sure, nobody knows exactly what's going to happen. It's only 1:30 p.m. here on the East Coast, but when the futures markets open up in a couple of hours at 6 p.m. on the East Coast, we are I don't want to say for sure, but based on the previous couple of weekends, we've had a good chunk of gap downs when it comes to the futures market. So we might be deep in the red. We might be deep in the red when it comes to these futures, and that would not be good. That would be an even worse sign, as at that point, SPY could probably go down and test the lows from a couple of days ago. If you take a look here on the 20-day chart, you can see those lows were 415. Those could easily go, we could go down to those lows, and SPY might even go down to 410. And same thing with Triple Q. We had that fake out, the fake breakout. It sucked a lot of buyers in, and then they got destroyed. They got their faces torn off as this thing went. Triple Q went from 339 roughly to about 324 in the same day. And just like SPY, this broke out of the lows, or broke under, rather, the lows from Thursday. The lows from Thursday being around 327. Now it's trading at 324 based on the aftermarket hours from Friday. So this is not looking good. And again, watch out for the futures market. If we see a wild gap down, that's not going to be good. And if we see a big gap up, that's not necessarily going to be good either, and these futures always flip-flop. You guys know that. It could be red at night, and then we could wake up Monday morning, and then the futures are heavy in the green, and vice versa. So keep that in mind, and again, watch out for those technical spots when it comes to Triple Q and SPY. And with that being said, guys, let's talk about some stocks. And if you guys haven't done so already, I would really appreciate it if you hit the like button, subscribe. It does really help me out in the YouTube algorithm, and I do, again, appreciate all of you guys out there tuning in. So let's break down. And by the way, let me know where you're tuning in from. I haven't done that in a long time. Where, what country, what state, if you're in the U.S., where are you watching this video from? Drop me a comment. And now let's talk about some of these individual stocks. Number one is FedEx, ticker symbol FDX. And this is actually one that I owned for a little bit. I owned it for a couple of months. I think I bought it maybe 225, 240. I bought more at 250 maybe, had a position at about 230 roughly, and I sold it into the strength here, and now I'm happy because it's a good chunk under from where I sold it. And just on Friday, this stock went down 2.8%. So they have earnings coming up on the 17th, which Monday's the 14th, Tuesday 15th, Wednesday 16th. So they report on Thursday, and all these stocks that we're going to talk about today do report on Thursday. And we have a lot of other companies, but we can't fit every company in this video, guys. The videos would be way too long. So number one, what we're noticing with FedEx is continuing the downtrend. You guys can see we took out the lows from the end of September, which is actually when I started buying it after it saw that huge drop 2 earnings reports ago, not the previous one, but the one before that. You guys can see it went from 250 down to about 215, so it dropped 15%. And again, that's where I started buying. So we actually took those lows out. We actually hit under 200. We hit $199 a share just a couple of days ago, 5 calendar days prior to me filming this video. So we're down a lot. FedEx is down a good 35% from 300 now to 199, and it is trying to bounce back, but ultimately this looks like a bull trap. At least the rally we saw was a bull trap to 223. Now we're trading at 213, back under both moving averages. So don't be surprised, especially if the markets in general are struggling this week, Monday, Tuesday. And mind you, we have the Fed meeting on the 16th. It's the 13th today, so a lot's going on. And if these markets struggle, don't be surprised if FedEx starts to go down to 199 again. Maybe it takes that low out. We go 180, 185, 190. I mean, that's definitely possible ahead of these earnings again on Thursday. And mind you, FedEx could be a decent long-term value play, if you will, if it gets under $200. Right now, the P is an 11.7. Market cap is, what's the market cap here? About $56 billion. They pay a 1.4% dividend, $3 a year per share that you own. So if this comes under 200, that P gets under a 10, that's going to be a very interesting level for FedEx. We also have GameStop this week, ticker symbol GME, which, like FedEx, has been downtrending like crazy lately. It hit 255 back in November. Now it just hit $93. It's down 65% over the past 4 or 5 months. And by the looks of it, this wants to take the lows out, or at least test the lows from the, when was this? The end of January, being about $86. Now we're trading at $93. So I think, believe it or not, guys, you know, we're under these moving averages. We're noticing a head and shoulders here. We're getting a death cross. I think we're going down to take those lows out. And we have earnings on the 17th. Like I said, all these companies that we're going to talk about, they report earnings, or at least the ones that do report earnings, they report earnings on the 17th, which is on Thursday. So GameStop went down 8% on Friday. That's not good. And like I said, it's down 60%. So this doesn't look like it wants to reverse. It does not look like that. Unless we get some crazy news on Thursday, great EPS numbers, great guidance. Maybe the business is going to do some strategic move to move them into a different direction, because let's be honest, GameStop is not the best company here. You know, it's kind of a dying company, but they are trying to turn it around. So we have to get some sort of catalyst to start moving this back towards the positive direction, bullish, if you will. But we're just not getting that yet. So watch out for GameStop. DG is another one. Dollar General. This one is trying to reverse. We hit a low of 181 just a couple of weeks ago, and that was a drop from 240. It fell about 25%. It got into a bear market over the course of a month and a half, 2 months. And they also report earnings on the 17th. And what I'm noticing here is a clear-cut inverse head and shoulders. Look at this, guys. We have the left shoulder right here. We got the head right here, and then we got the right shoulder right here forming, and we're trading currently above the 50 SMA, but not quite yet above the 180 here on this 4-hour chart. So we got to break out of 210, 212. That's where I'm going to put my alert, because at that point, and mind you, that's not only the 180 SMA resistance, it's also the top from last week, you know, 212. So we got to take that point out. Also, 212 was resistance in the end of January. So if that point breaks, this right shoulder could gain a full head of steam. We could start going towards 230, 240, no problem, based on this chart and based off of previous price actions. So watch out for Dollar General. I like it here. Dollar Tree is another one. DLTR is the ticker on this one. We're noticing it's trading above both moving averages. We're seeing a golden cross. The inverse head and shoulders played out that we called out. We filled the gap to about 148. Now we're trading literally right at 147, so a little bit under 148. So I'm watching this for this week. If we take out, let's say 150 again, which we did earlier this week, it went to about 154, then we pulled back. Like I said, we closed at 147 on Friday. If we start breaking 150 again, I'm going to put my alert. This could go 155, 160, no doubt in my mind. So I'm just putting my alert at 150. Watch out for the breakout again on Dollar Tree. Activision Blizzard has been consolidating, guys, for a couple of weeks, and I think it's getting ready for another move. You all know at this point, Microsoft bought them out for about $70 billion, a massive acquisition a couple of weeks ago. And since that point, the stock ran up from, when was it? 60, or where was it? 60? Yeah, $60 to $90. Now it's been consolidating around $80 flat for a good almost 2 months. So I think this one in either direction, and right now I'm leaning towards the bullish direction. I think we're going to see a move in either direction. I think we could bounce off of $80 or right around this 180 moving average, which is at $80 on this 4-hour chart. I think we're going to bounce off of that and maybe start to make a move back towards the mid-80s, or maybe we fill the gap back to where this was initially when it shot up in the middle of January, which is at about $90-$95 a share, giving this, who knows, maybe 8, 10, 12% more upside. And it's good to see that Activision is holding its ground throughout this entire sell-off. It's pretty crazy. I mean, yes, it is down from 92 to 80. So technically it is down about 16% technically, but overall it's still shot up a ton in early 22, and it's still up overall in 2022 while the overall markets are getting destroyed. So watch out for this to play. Maybe mid 80s, high 80s, low 90s is where Activision could be going. I'm also watching crude oil like a hawk this week, guys. Crude oil closed under 115 this week, which is not good, and it closed under 110, which is arguably even worse. And we're noticing on this 20-day chart, which might be even worse, a death cross, and we're noticing the head and shoulders play out that I actually called out last week. If you guys remember that, we have the left shoulder, the head, the right shoulder. I mentioned how the neckline was at 115. We had to break 115 to get to 130. We failed at 115. Again, we're now getting that death cross. This, if it falls under 105, it could free fall back into the 90s in the very short term here. And we all know oil is very volatile, and it ran up a lot. And I'm not turning bearish on oil all of a sudden. I'm just being, honest. This is how it works. It ran up 46% from $87 a barrel in the middle of February, not even a month ago, to 130, which that hit 5 days ago. So in 3 weeks, essentially, it ran up 45, almost 50%. And now we're what? We're down about 15%. We're still up net 35% over the past less than 1 month. So at this point, anything could happen. Nobody knows what's going to happen. It wouldn't surprise me if it went down to 195, and it wouldn't surprise me if it broke out 115 plus. So for that reason, I'm kind of on the sidelines right now. I still have my XLE investment. I sold out of my swing trade of XLE like a week or two ago, or maybe more towards a week ago. And now I'm just being a bit patient with oil until it figures out its direction. And you guys can see here, XLE is looking a bit toppy at $78-$80. It's now at $76. This could probably come down if we do get that dump in oil towards $100. This might come down to 73 a share. Maybe I'd consider buying back in at 70, maybe 72 a share as a swing trade. So watch out for XLE this week. Oxy is another one, Occidental Petroleum, which if oil does see a bit of a haircut, who knows? Maybe it falls another 5%. Oxy could come down to the low 50s, no problem. It could go down to the low 40s, mid 40s if we got a huge dump in oil, which I'm not expecting that, to be honest. That's pretty far-fetched based on, all the geopolitical tensions right now and everything going on. I don't think oil is going to come down that much in the short term, and especially with inflation. But who knows? If that were to happen, then Oxy could come down to the low mid 40s. So watch out for these energy stocks this week. That's the moral of the story here, guys. They could go either direction. We have GLD as well, which I like the setup here. This hit 193 last week, and we ended up closing at 185. So this thing did pull back about $8, so around 4%. It is holding the 50 moving average right now on this 4-hour chart, and we are still looking very bullish as long as we hold the 50 SMA, because if this breaks, we could drop another $10, which could mean another 5% down. And let's see gold. If you guys didn't know, gold follows, or rather GLD follows the gold chart. So if you want to trade gold and you want to hop in and out, make a quick day trade or a swing trade, I would do GLD. I would use GLD rather, and I'm not telling you what to do. I'm just saying what I've done in the past and kind of my experience. That's what I've been using, and a lot of people use that. But if you want to invest, or not even invest in gold, but if you want to put some money in gold for a longer-term store of value, I would buy physical gold at that point. But if you want to trade it, again, short-term stuff, use GLD. And overall gold, you also notice a head and shoulders on this, kind of like crude oil. So this one needs to break 2,000 an ounce, 2,010 an ounce. So I'm not going to touch GLD until we get that breakout in gold, if we even get the breakout. So that's what I'm looking at for GLD and gold. Microsoft is the last one right now that I want to talk to you guys about very quickly before we do wrap up this video. We are about 17 minutes in. Make sure to hit the like button and subscribe if you guys haven't done so already. And again, don't forget to let me know where you're from. Drop me a comment. And look at Microsoft. This could be setting up for a dump. Take a look. Head and shoulders. We have the left shoulder, head, right shoulder. Clearly, we've been in a downtrend since November on this stock. It's down about 20% now, officially in a bear market. And if this falls under, let's call it 275, maybe 270, literally right around where we are right now, the floor could drop out for Microsoft. And this especially will happen, in my opinion, if geopolitical tensions escalate, inflation gets worse, maybe we get some kind of crazy surprise from the Fed this week, which I don't expect, but who knows? Anything could happen. If that does happen, guys, 270, 275 breaks on Microsoft, this could fall mid-200s, no problem. We're talking 245, 250, so keep that in mind. And in that same breath, watch out for the other big tech names. Apple. If Apple breaks under 150, it might free fall to about 140, 143, 145 roughly. That's where it could go. Google, I hope it free falls. I'll be buying more of it. If it falls under 2450, 2500, we have what else? Facebook, which don't even get me started on Facebook, guys. This thing has been getting clobbered. It probably will go lower, and I'll buy more. I'm looking to buy my fourth tranche of Facebook, anywhere from 180, 185, under 180 would be nice. So that's kind of it. And there goes my, if you guys can hear that, that is my laundry. Holy crap. It shakes the whole top floor of this house, guys. So yeah, that's it. Hope you guys enjoyed the video. If you did, hit the like button, subscribe, drop me a comment. Again, let me know where you guys are from. And don't forget to join my Patreon if you want all my buy, sells, call outs, morning update videos, more access to me throughout the day, plus more. That's linked down below. And don't forget to get your free stocks. You get up to 5 stocks, each of which could be valued up to $3,500, and a free share of NEO on top of that, which is free money, guys, guaranteed. Use my link down below, deposit at least $100 with Moomoo, and you get that free money. And with that being said, I'll catch you guys in the next video. Have a great rest of your weekend. Peace out.